Hey guys, welcome to Wealth Wisdom Financial. I am excited for this one. As you know, we haven't been doing a lot of lives, but now we are. Hold on a second. I'm hearing myself here. So anyway, I'm on my own YouTube. So anyway, been doing a lot of lives in the past and stopped for that for a while and really been focusing on some of our own content. As you know, we've been doing some things on velocity banking. We love infinite banking. That's a really powerful thing. But really, through this, I've learned a lot about YouTube and um, velocity banking through this guy named Denzel Rodriguez. Literally, I'm. It's kind of fun to have him on the show because I've watched a lot of his videos. We've talked a lot. Now, a little bit about Denzel. He's a 26-year-old entrepreneur born and raised in Queens, New York, by a single mother, and we're going to talk about that because I was raised by a single mom. That's why I really wanted to have him on. And he felt compelled to learn about finances. His first client was his mom, and now he is the financial geek. He specializes in helping moms become debt free, increase cash flow, build credit, and establish kingdoms that will last forever. I really like that because of my faith background too. Denzel is helping thousands of families across the United States master their finances by using velocity banking, infinite banking, and of course that kingdom authority in their household. He is honorable, passionate, and powerful man who credits all his success and wisdom to God. And he spends most of his time teaching financial concepts on YouTube. Again, you'll see he has a ton of subscribers there. One day I'm hoping we'll get there. He has like 3.6 million views and 45,000 plus subscribers. And of course, he wants to keep growing. Again, he's only 26 years old, right? So I'm excited for this. So, and I guess Tim's here. Tim said, "Wooha, go with Denzel. Denzel has helped me big time." So, anyway, thank you for joining us, Denzel. I'm excited to have you here.
Honor and a privilege. Thank you, sir. I know you've been watching my live streams quite a bit. You've even commented multiple times, so I can go back and see the history. So it's good
Yeah.
that we're finally coming together. That's how a lot of my collaborations have actually gone so far. Is I either go on their channel, they came on mine, comment, and I
Yep.
keep seeing them over and over again, and not even knowing that they're also a YouTuber, right? Because you can never
Yeah. Right.
tell. You can never tell who's who in the comment section. And then all of
Yeah.
a sudden they're like, "Hey, we should do some work together." And then once I finally click on it, I'm like, "Oh shoot, they're doing
Yep.
videos and content." And then boom. So it's really good
Yeah.
to be.
I think that there's a lot of people who are you know absorbing content in general. There's a lot of we have so many subscription models and everything else, and there's the people who just consume, and then there's the content creators, and it takes a whole different level to be a content creator and to even talk about, I don't know, velocity banking uh, all the time, every day, and people still want to hear the same show. I feel like all the time, and you're like, isn't this a repeat? Um, but we have to realize that some people are coming mid into the mid show, right? And we want to catch them up before they. I don't know. I've been watching She-Hulk lately, and I'm like, you don't just start in the middle of the show. You start in the beginning, and that's a hard part as content creators. So, how did you start in this industry? I want to hear about Denzel, like as a kid. Um, what was money like for you as a kid? I heard the single mom thing, um, but did that impact you? Or is it like no shoes, or where were you at there?
Yeah, absolutely. And I think my loyal followers and clients of mine will appreciate this because I usually don't do much content on my backstory, where I come from. I'm
Mhm.
usually a meat and potatoes type of guy. Let's get right into the strategy, and you're on your way. So I like doing these types of conversations here and there with people, so they can kind of see what perspectives, what traumas have,
Mhm.
brought me to this point, as to why I'm so critique, as to why I'm so into the meat and
Yeah.
potatoes and solving for the problem first, then getting to know you later, right? And
Yeah.
so in my upbringing, as it relates to money as a kid, my very first memory of money was probably around maybe 5, 6 years old. Birthday, I remember receiving a few dollars as
Mhm.
a birthday present, so I got money. And I think my second memory was trick or treating, Halloween, and instead of getting candy, I got $1, right, or like two
Yeah.
dollars, right, instead of getting candy. Those are my earliest memories of money, and one of the very first things I did with the money was save it. Nobody told me to do it. Nobody gave me advice. No one around my family knew anything about money. So it was almost like this instinctive thing to do because of the environment that my mom had to work with. And so it was
Yeah.
like this instinct as a young boy that, okay, every dollar matters in this household. Mom's going to eventually need that dollar or $2. So let me just hold on to it, and whatever gifts I get, I'm cool with. I was one of those kids is very content.
Mhm.
I was the type of kid that you just give me Legos, give me the cars, the Need for Speed. I would build tracks from one end
Yeah.
of the hallway to the other, and I would be there for 4 hours, 5 hours, not make a peep, not make a sound. I was just one of those types of kids that you didn't know you had a kid in the house.
Yeah.
Um, I wasn't climbing walls. I wasn't, getting into big, problems or causing headaches, because I somehow knew the extreme amount of pressure that my mom already had, working 2 jobs, having to travel from Queens all the way to Manhattan, take 2 trains, a taxi, then back home, and have to pick me up from school, and then my older sister's going to school. And so I
Yeah.
just somehow knew that, hey, the last thing I wanna do is be another headache, so I'm gonna be a good
Yeah.
kid, right? So
Yeah.
that in and of itself is some trauma, right? Some obstacles there. And then, fast forward to teenage years. Once I started working, got my first job, I just always saved the money.
Yeah.
Anytime I spent money, it was always because mom needed it to cover a bill or cover an expense or help out in some way, shape, or form in the household, right?
Yeah.
So that's been my experience as a kid growing up. Lack of money, lack of knowledge, and the only thing I knew how to do was save it, preserve it, so that it can be used in a time of need. And even to the point where I mean, I would save the nickels, dimes, pennies, quarters.
Yeah.
I would have $100, $50 in pennies, nickels, dimes, and quarters, and that was enough to go grocery shopping, to that didn't, where the WIC or the welfare check didn't make up, my
Yeah.
coins made up for it. You know what I mean?
Yeah.
And that's a 10-year-old, 12-year-old, 14-year-old, the whole way through. It's all I knew how to do was save and preserve the money in times of need for that to be
So it
deployed.
sounds like you were like a entrepreneur before you even knew what entrepreneur was too. Were you making money as well, or just
Mm-mm.
hey, grandma gave you $1?
The only way I received money was either from gifts, holidays, birthdays, or finding a quarter on the floor at the laundromat,
Yeah.
or anytime mom came home with tips or change, throw it on the table.
Yeah.
Or once I had my stepdad, once my mom found another person, and so I had a stepdad after 6, 7 years old. When he would come home from work, he would throw coins and nickels on the table like he didn't want it, and
Yeah.
I would just, take that, put it in a little piggy bank, put a little box, and that was the only way I ever was interacting with money. Even
Yeah.
in middle school, when you're given $1 or $2 to go to the lunch line to get something, or a snack machine. Like anytime I got money, I just didn't spend it. I was
Yeah.
like, you know what, I can go without the chips today. I just held on to that dollar. Then the next day I got another dollar. You know what I mean? Like this, just how it was.
How is that translated into you, adult Denzel now? Do you still feel like you're kind of holding, some of that, or is what's changed or hasn't changed?
Well, I've been able to overcome the lack of knowledge by simply putting myself in positions to be around knowledgeable people, right? So
Right.
after I graduated high school in 2014, my first experience into sales and marketing, speaking, communication, getting referrals, business, all of that was selling Cutco knives, right?
Nice.
And this is high end kitchen cutlery. So I was doing that, and then from there, joined about maybe 5 to 7 different MLMs, network marketing companies. Failed at all of them in terms of making a lot of money, but I was successful in getting leads, referrals, networking, communication, speaking, and I just
Nice.
I took all of that and was like, okay, here's where I come from. Here's the potential. It's so wide, so great, so abundant. I'm gonna go after it. So you take 2014 to 2018, a good 4 years of preparation, learning,
Mhm.
reading, content, you name it, absorbing as much as I possibly can, while simultaneously still being a good steward of money. Any
Yeah.
money I would make, I was just saving and preserving it for the right opportunity to come its way. Even if I
Yeah.
got into an opportunity where I invested in myself and it failed, to me it was still a success because I'm like, gotcha. I'm not good at that. Let me go to the next. And then come to find out around 2017 is when I discovered velocity banking through a real estate educational school called Renatus, and it clicked for me. I was like, oh my goodness, I've been doing velocity banking, not even knowing it, by utilizing credit cards, by saving my money. You know, another strategy that I would do all through 18, 19, 20, 21 was I would get a credit card from the bank
Yeah. Yeah.
and I would give my mom the credit card to pay for any bills that she couldn't cover. And then I would use my income to pay the card back, and I would get cashback rewards in the process while building credit. As I was building credit, it gave me access to better credit card offers, 0%, 12 months, 0%, 24 months. So here I am, just every time mom asks for money, every time mom needs money or the family needs money,
Yeah.
I gave him the card, and then I would velocity bank the credit card to not pay any interest whatsoever, right? And then once
Yeah.
I discovered that that's an actual strategy that you can use to, say, pay off a mortgage, pay off a car, or even make money by leveraging debt, it all just kind of clicked for me. And then I was like, oh, let me help my mom do it, right?
Yeah.
Took me 2.5 years to convince her, but once she finally said yes, I've been able to pay off all the debt. And then fast forward to 2018, like August is when I started creating video content on it. And I literally just started off, was like, hey, here's my numbers, dot, dot, dot. Here's my mom's numbers, dot, dot, dot. Here's a friend's numbers, dot, dot, dot. And
And
it kind of just took off from there.
well, I think, there's a couple things that I think about in our world. You could have been a victim and said, "I'm a
Yeah.
victim. I'm gonna, just stay in this victim world," or you said, I'm gonna be in a different position. I'm gonna learn and be different." And again, I hear this in the financial world. People are like, "Yeah, this happened, and this happened, and this happened," and I'm a product of a single parent, right? With several dads, growing up, and I could say, "Well, yeah, well, that sucked, and I'm just gonna wallow in it." But you took a thing of learning and, failing forward and fast, and saying, "I'm going to try this. Oh, didn't work. I'm going to do something different." And then you educated yourself about, how money works unintentionally. This I want to tell you this funny, story, and James is here. He said, the Wealth Wisdom Financial Polo is on fire. This is my new polo that I got. Figure I'm got to start branding. James, you
Way to
might get it
go.
one day. I might send you one. James runs the Financial Advisor Marketing Podcast, so he's a great guy. Um, he's a podcaster. He's been on my channel before. So I was talking to a friend of mine, a neighbor down the street, and we were talking about velocity banking, infinite banking, and it was really interesting. I was like, all right, I met him through COVID. Actually, I moved to my house March of 2020, and then the guy moved. I was like, all right, I'm never going to talk to that guy again. So fast forward about a year later, he calls me up on the phone and he was like, I remember we had talked about velocity banking. I've been doing that. I've been watching this guy Denzel Rodriguez all the time, and I feel like I'm doing everything great. He has now like 21 properties, or almost 21 properties of real estate deals, and he said he also mentioned infinite banking, and I remember you kind of talking about that, and we ended up having a great conversation, and he ended up becoming a client, all because of um, of engaging in your content like years ago, and then seeing velocity banking and infinite banking, right? So anyway, I just wanted to share that story among a few other people that I know
Nice.
that have listened to both that you probably don't hear. You don't know because there's a
Right.
lot of people who watch YouTube and they never comment, right? They
Yes.
never say anything, and you're like, wait. So I just wanted to show
It's
that.
usually it's usually the higher income earners that are
Yeah,
like, you don't expect a seven-figure person to be watching your stuff when you're not even close to that number yet. And I'm
yeah,
over here blowing their mind that they're
yeah,
like, "Wow, I've been making all this money and I could be maximizing these dollars to make even more. This guy got it at 25, 24, and here I am 49 years old just getting." So they're
right.
fascinated by that, but at the same time, they don't comment, they don't reach out until like, I don't know, years later. That person, was his
Yeah.
name Ralph?
No, it was not.
No? Okay,
Um,
okay. Because he sounded
I'm
like someone
sure.
that I know.
I'm
21
sure you'll
properties
see
is
it.
is remembering
Yeah.
in my mind because I do know someone, that has that many properties, so
I'm
that's
sure
why I
you'll
asked.
see him in the comments because he does know that this is happening. And I did ask his permission about, can I share this?
Okay,
And this guy is killing it. And he asks questions all the time about using the velocity banking style, using infinite banking. And oftentimes we'll just be almost like whiteboarding it, but kind of just talking back and forth. And I'll ask, well, what's the cost of money? What's the this and that? And a lot of times people don't know those answers, right? And I do think that velocity banking and infinite banking are more about cash flow management, right? That's kind of the things
absolutely.
I think it is, and a lot of times people are asking, well, what's the rate of return? What's this and that? I'm like, it's not about rate of return. It's cash flow management. So, one of our courses is how to manage cash flow like a millionaire. And we use a budgeting tool called YNAB. And I know that people don't like budgeting. I don't like budgeting either. But how do you, and you're saying this is you're not a millionaire yet, but how do you manage cash flow like a millionaire? And how is that different than budgeting for you?
Yeah. So, when it comes to the millionaire status, so I have broken seven figures, but I haven't really qualified myself as a millionaire yet. But although I do hear a lot of people say as soon as you make seven figures, you're a millionaire. So I don't know
Yeah.
which
I don't know
qualifies,
either. I'm like,
but
apparently with if I have a house and all that, I
I'm
am,
a
but
millionaire. Like, wait, what?
yeah,
Like to me,
yeah,
it's like, have you made millions? Like you created. That's when I'll feel comfortable saying that. But
yeah,
in the meantime, the way I manage the money as if I was, in the top 1 to 10% of the economy or in the US really does start with not budgeting, right?
yeah,
Because I do believe that budgeting can produce a limiting spirit or
yeah,
a spirit of cheapness that can
yeah,
creep up on you in ways that you wouldn't expect. For example, when it comes to tipping at the restaurant, tipping the valet guy or girl. Um,
Yeah.
Oftentimes, if you're budgeting, then you're not allowing yourself to maybe have a white glove type of experience,
Yeah.
or bless someone that could potentially result in a much higher return blessing harvest back to you. Uh,
Yeah.
so there's a place for budgeting without a doubt, but there does come a point where budgeting to me makes absolutely no sense whatsoever.
Yeah.
And so the way I manage money is by simply knowing where every dollar goes. If you're creating a budget, you still don't really know where every dollar goes because you're saying, okay, I'm budgeting for this and I'm budgeting for that. But what ends up happening is people don't follow the budget because
Yeah.
life's hard, life's confusing, life is an obstacle, things change, things happen. Where in my case, I go through with my clients and myself, I'm just like, just give me all the numbers. That's it.
Yep.
Just go through the bank statements the past 90 days up to a year and the credit card statements, wherever money coming in and wherever money is leaving. That's all we need to know. And now you have a financial statement, a month to month financial statement, and we
Mm-hmm.
can determine what your current lifestyle is based on
Yep.
what you've done in the last 90 days up to a year. From there, I'm now going to incorporate a strategy that can supply that lifestyle more than double. So that's now
Yep.
affecting the top line income, right? So I do come from the perspective of like multiplication rather than grow. So I would
Yep.
rather multiply a dollar than grow a dollar by 10% or 6%. I'd rather
Yeah.
just simply multiply it, make one, two, and two, four, and just to game of multiples, right? So that's where I'm coming from that perspective. And so when I'm working with my clients on incorporating velocity banking, we just simply look at where all our money is going in the first place.
Yeah.
And we can simply cut the fat. That's it.
Yeah.
We're like, okay, I'm gonna cut the fat. What's cutting the fat? I'm gonna cut out cable. I don't need to watch Game of Thrones, Walking Dead, and Mandalorian. So I'm gonna cut out
Yeah.
Disney. I'm gonna cut out Hulu. I'm gonna cut out this for the next 6 to 9 months. I just redirected $500, $750 in cash flow by cutting off cable and these useless subscriptions for a temporary period of time,
Yeah.
right? I'm going to cut out eating out 5 times a week. I'm going to cut it down to three. That's another $50, $75 in cash flow recovery, or $80, whatever it is. That's all I'm doing, just cutting the fat. Now I've got more cash flow because I'm no longer wasting, not budgeting. I'm just simply cutting the fat. And then I'm now applying those dollars to be used in the most efficient way. And that'll be the last thing we solve for with the client, which is solving for maximum efficiency. Should I put this dollar in
Yeah.
myself to increase my skills, gifts, and talents to increase my value in the marketplace? Or do I just want to eliminate these 5 to 7 credit cards that will recover 15 to
Yeah.
25% in interest and $700 plus in cash flow? You get to decide, right? And we go from
Well,
there.
and I think that as I do financial analysis with people and seeing that, I can see what they value, right?
Right.
And
Yeah.
oftentimes those Netflix things, and sometimes that's important. I have Disney Plus, right? And at the same time, I used to own a coffee shop, right? And whenever they say you just don't need to buy that latte because if you don't do that latte, well, you could make all this money in the future, right? And I'm like, well, if I was a coffee shop owner, I really want them to buy lattes, and that's really important, right? Um,
Yes.
and I've realized for me, I really like the value of that. I have that as a higher value. I mean, I don't drink lattes every day, like once a week maybe, but but it's okay to have certain things, and you just know as you manage your cash flow what brings you joy and what doesn't. And oftentimes people are just buying things, going on a fake high, versus really, is this really important? And I love this idea of multiplying the dollars, right?
Yeah.
Um, really, it's all percentage based. As I
Yeah.
do anything, people are like, well, how much should I give? Because I'm a person of faith, and I'm like, well, 10%, you know, and if you make $1 million, that's a lot of money, right? But it's a percentage. So, if I want to spend more, but that's okay, right? But it's all percentage based. Um,
Yes.
do you live with that percentage based kind of
I
idea?
I do like the 60/40 rule that I learned from Grant Cardone, and I also like the 70/30 rule that I learned from quite a few pastors, which is, 10% tithe, 10% save, 10% invest.
Hmm.
Grant Cardone 60/40 rule, he says, save take 40% off the top, live off
Yeah,
the 60. In the FIRE movement, financial independence or retire early, they're the most radical. So they'll say live off 50% of what you make, right?
yeah,
Save the rest,
yeah,
invest the rest, right? So any one of those concepts I do adopt in my own strategy, as well as when I'm working with clients, where I'm like, look, you're simply over leveraging yourself,
yeah,
not even in the debt category, but just looking at the income and expense, you're over
yeah,
leveraging. So, and what I'm not telling them to do is cut all the fun out and go live on rice and beans. Like, it's too
yeah.
radical, and it can cause uh unwanted spirits to come into the
Hmm.
household that you just don't need, right? Like, I think it's very important for me to tip the waiter, right? And
Yeah,
tip the valet. And if I don't do that, I feel like that cuts out a little bit of the experience of being able to bless someone. If I remove the giving aspect of my finances, I feel like I'm totally cutting off wealth accumulation and wealth multiplication if I
yeah,
don't quote unquote tithe or give or do offerings, be a blessing. So I like to let the client know, hey, like, let's not cut all the fun out. I'm simply saying, how do we be more
yeah,
intentional with every dollar? There's another YouTuber I'm friends with. His name's Caleb. He's all about intentional living, right? So he
yeah,
looks at the finances and, okay, is this dollar purposed, or am I
yeah,
simply wasting it? Like, am I being intentional when I order out, Uber Eats, Lyft, right? Like,
yeah.
or am I just wasting for that, like you said, that
Yeah.
temporary high, right? And
Well,
that's
and
that's all we're solving for, right? Intentional living.
that's something we've thought about a lot, and we have a thing we call the still method. And I'll let you know. And if you guys want this, it's at I think it's www.stillmethod.com. So the world is in chaos. It's confusing, haphazard, anxious, overwhelming, and stressful. Right? That's our taxes. That's everything. Right? Still method, and this is part of our community and why I loved Caleb and just his intentionality. It's setting your sights, right? Tracking your in and out, at least kind of having an idea. It doesn't even need to be, you don't need to call it budgeting, whatever, but track in and out, inspect your progress. That's kind of inspecting and saying, do I really watch Disney that much? Do I, look for 1% adjustments and live deliberately? uh, Doing that on a regular rhythm, intentional. And part of this, and why I liked having you on too, is it brings me back to my faith. And Jesus oftentimes says, "Be still," right? And he retreats, and he's thinking. And I'm like, maybe that's something important that we need to realize. How have you helped clients to be still as they're coming to you and saying, I want to do this and I like velocity banking and this and that? How do you help them just kind of step back and say, okay, whoa, whoa, slow down and now let's create a plan.
Gotcha. I'll address it the spiritual and then logical, answer. Logically, I simply get the numbers from a client. I don't get on a call with anyone that doesn't have their numbers prior to the call. And even if I do
Mhm.
get on the call, we're not going to talk about anything else other than getting those numbers first. So I need the numbers, right? Logically speaking. Now I know where you're at financially, regardless of your emotions. I know where you
Yeah.
are financially. And then I figure out, for example, I was dealing with a client. He's a pastor. Um, he's wanting to make more money, right? His gift, according to his own words, his gift is in video production for churches, right?
Yeah.
And as we've seen in the last 2 years, all of the churches had to adapt very fast, from the mega churches down to the
Yep. Yeah.
neighborhood church. They've had to adapt using Zoom and all these other platforms and live streaming and things like that. He has the skills in video
Yeah.
production. Okay, we create a whole strategy around creating value, consulting, coaching, pricing, signature offer, speaking, creating content, marketing, sales, the whole thing around video production. And then they come back on another call. Hey, I saw you did a video on creating a Shopify and Amazon store. Is this a good investment? Should I put my money in crypto? Should I do stocks? I come back to
Yeah.
logically, this is
Yeah.
your skills, gifts, and talents, what you are good at, what you can make a lot of money from.
Yeah.
Spiritually now, here's the spiritual answer. Simply, what does the Father say? Right? What is Holy Spirit saying? Is the Father saying anything? Is he silent? Because I know that happens to a lot of folks. They don't hear
Yeah.
because they're too busy listening to 50, content creators. So I'm like, first of
Yep.
all, you need to cut out all the noise so you can actually listen to source. Go to source first. Now you have a resource, maybe one person who is also aligned with the Father, and the Father is sending you a resource. And now you're zoned in on that resource. And now we have a strategy to back up what the source said to do from the resource, right? So
Yeah.
I'm all about, spiritually speaking, what does the Father say?
Yeah.
What has he called you to do? Two ways to answer, to ask the question. I'll say, well, who do you want to be? Is one question. Second question is, what is God's will for your life? Most people can't answer this. Even pastors, that
Yep.
I've
Yep.
spoken to, they get confused. They get a little, because they're not being asked it on a daily basis or a weekly basis. It happens on a New Year's is when they ask the
Yep.
question. So we can oftentimes be in the movement, but I'm constantly reminding myself or asking myself or having people ask me, dude, what is God's will for your life? Did it change? Did it shift? Is it the same? Do we have to
Yeah.
pivot? Right.
Yeah.
So that is the spiritual answer. The logical is looking at the skills, gifts, and talents. What are you already good at, and how can we increase value in the marketplace, get paid abundantly, problem solved? Spiritually
Yeah.
speaking, sometimes it takes a little while for the Christians that I work with because they're too busy, like in the word, and they don't know how to get out and actually apply the word in the
Yep.
world to be
Yeah.
an effective, impactful speaker or business owner, entrepreneur. They're too busy,
Yeah.
like, oh, well, scripture says this and da 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 and this said that. And I'm like, sure, it's that word's gonna be there now
Yeah.
and thousands of years from now. It ain't gonna change. But what are you gonna do with the word? Right. And go
Well, and
apply it.
that's where when I ask a lot of people and in general was thinking about when we started our ethical coffee shop. It was called Overflow, and it came out of
I like that.
hmm, community building and ethical economics. And my thoughts were somebody needs to do something about that. And if it keeps coming up, then that's probably you that needs to do it. And so we launched into starting this coffee shop, and we put everything in. We did not have a rich relative to start. We did not have. We just learned a lot along the way. And I've read a book by MJ DeMarco. I told James this a while back that he says, if you want to be wealthy, don't start a coffee shop. I was like, oh man, I should have picked a different industry, I guess. But 5 years into it, we sold it, right? And we felt good about selling it because we knew we burned the bridges, we did the things God called us to it. We had no other way to go about it. But then we also felt that He said, "All right, it's time to leave." And then we got into this industry because and this is why I'm in infinite banking and all of this. And I did not know that Dave Ramsey loves to hate on me. All I knew was this system helped me to sell my business, not close my business, because I had access to capital. I was able to overcome that obstacle. And I was able to, again, sell it, not close it. Um, and I kept sending my mentor, who's also a master's of divinity, has a MDiv and is in life insurance of all things, doing this. And now we're doing setting up policies and helping people, which I love, setting up life insurance policies for people because, in essence, what does it do? It protects widows and orphans. What is the mandate of that? Widows and orphans, right? Protect. And I'm like, maybe that's the most biblical product out there. Maybe, I don't know, but anyway, that's some of my preaching for the day, because I know you're kind of a preacher type as well. But have you? How do you experience and have you? What do you think of the haters that are out there that question velocity banking and question infinite banking and I'll call you a heretic, if you will? How do
Um,
you overcome that?
whether it's in the comments section or if they email me, that
I'm sure they do
you know,
both. I'm sure
yeah,
you get plenty of hate.
they're irate, they're mad, they're angry, they think it's a scam or whatever it is that they say. I just simply reply, "Hey, when you're ready to have a conversation, email me here, schedule a phone call, and we can discuss this in detail." 90% of the time, no answer. They'll stop, never
Yeah,
hear from them again, um, because they're not prepared to present the alternative. Like, what is the alternative to what I'm doing? Right.
yeah,
And is it better? Right. Is it more efficient? Does it yield better results? Let's debate. Right. Happy
yeah,
to put it all on the whiteboard. I've had some wonderful debates and conversations on my YouTube channel that those who are watching can view, where I've had one YouTuber come on my channel twice. It went on his channel, he went on mine, and we
yeah,
went back and forth on the velocity banking concept, the validity of it, the credibility of it, whether the numbers add up, and the audience wins. Right? They get to make a
yeah,
decision. They get to see both sides and go from there. Then you have people that have, when I email them, they say, "Yeah, gotcha, I'll email you." So I've had someone uh, off camera, didn't record it, and we went into a Zoom meeting or Google Meet, and I just went through the numbers, and more often than not, they're getting choked up. They're not prepared.
yeah,
So what I've come to the conclusion of is, okay, they had a traumatic experience with money, must have, right?
yeah,
Or they are engraved in a specific financial philosophy. Anything that does not correlate or relate to this financial philosophy, everything else is wrong, right? Well, that's kind of like religion. You got 45,000 different Christian denominations, and you're going to tell me your Christian denomination is the right one, but there's 45,000 of them, right? So we can be here all day arguing doctrine, or we can just focus on kingdom. What do the
yeah,
numbers say?
yeah,
What does the word say? And then kind of go from there and expand upon that. So I look at it the same way with a financial philosophy. Oftentimes the haters are coming from another financial philosophy. I got
yeah,
people come from mostly from the Dave Ramsey community, where all debt is bad, right? All, scripture says do not use debt. I haven't found the scripture where it says that all
Yep.
debt is bad, do not use debt. I have not found that scripture. Scripture informs us and educates us of not becoming a slave to debt. It's very different from me having control, authority, and confidence and mastery over debt, where now I'm a lender unto many nations. It's a different ball game we're playing. We're playing different rules.
Yep.
They're playing checkers. I'm playing chess, right?
Yep.
Same board, different rules, right? And so for me, it's conversation, it's dialogue with the haters, because oftentimes, um, if you approach it correctly, they either become converted or they stay in their strategy because it's simply, this philosophy simply is not efficient for what they're doing. And that totally makes sense. I have clients that pay me money but are not doing velocity banking because
Yeah.
it's not efficient enough for them to do velocity banking, right? Or they're simply not ready, right?
Yeah.
It just comes back down to the numbers, your pre-existing philosophies, what you think you know about money, and if you're willing to learn a new thing, right, in your life to advance and go to the next level. So that's how
Yeah.
I handle that. I just
Well, and
simply I just simply respond. Are you willing to have a conversation? Email me here. We can set up a phone call.
yeah. I remember the other day I was in a Zoom meeting and I was getting like literally, I felt like attacked on this call with a group of 15. And I was like, I don't, I'm not all in the market side. Maybe that's a good thing. Maybe it's a bad thing. And most of my answer is it depends. Right. And it is, and they would say, well, that's not a great investment vehicle or whatever. I'm like, it's not an investment vehicle. Never said it. But people are again stuck in their dogma, fighting, and even in the comments, they're like, "This is like red versus blue," and all this. I'm like, I'm not trying to be a fighter. And the hard part in marketing, and this is a challenge that I think is uh, hard in general, is Dave Ramsey says this, and there's no variation, right? Most people's answer when it comes to finance in general should be it depends. Do you need to have a latte to be healthy? Maybe. I don't know. Maybe that's good for your psychology. I don't know. Um, but that means you have to have relationship. And our world is like, oh yeah, I'm going to give you a thumbs down and hate you, but there's no relationship, right?
Right.
That's what I like about this. So,
Yeah.
um,
The other
yes.
strategy, the
Oh,
the
go
other
ahead.
strategy in regards to people who hate and whatnot is you simply need a bigger microphone at the end of the day.
Yeah,
Is the way I look at it. Is like I look at what Grant Cardone did, and he is the total polar opposite to Dave Ramsey, but he has a bigger microphone than Dave Ramsey now.
yeah,
Before he
yeah,
didn't. Now he does. Now he's got a whole nation of people from all different nations that follow his philosophies. And I
yeah,
bet you most of those people converted from the Dave Ramsey, Susan Orman camp, right?
yeah,
And now they're over here. So I'm just doing the same thing. I'm just getting a bigger microphone, and better known beats best is what I've learned from Grant at
yeah,
the end of the
yeah,
day. That's what
yep,
Jesus did. He went out and he spoke. He had many
yep,
speaking engagements, many Q&As, many one-to-one sessions, marketed his strategy, marketed his kingdom, and now it's the largest kingdom that has ever existed,
yeah.
larger than any kingdom ever before, with the most amount of converters, with the most amount of credibility, and I mean, you name it, you go down the list. So that's the way that I'm handling that,
Well,
because at
and
the end of the day, they could be my next client, that hater, you know?
yeah, and I think it is like it's being still, but also being out there, right? It's like that. What I love about the Bible and in general, like a lot of this, it's usually a both and, right? Be in the market and do life insurance. those kind of things. It's not an either or, it's a both and. And how do we balance those? And that's the hard part of balancing, being budgeting. Like maybe budgeting is good for some people, and some people will be on one side, and some people are spending like drunken sailors that they shouldn't, right? You know, and being in that what they call radical middle. Um, and that's the hard part to be in, and using our skill sets, whether it's velocity banking, infinite banking, whatever. I don't Doesn't matter. But I also think that there's a lot of slavery. The Bible does talk a lot about slavery, and we are a slave to consumerism. There's a book called um, the Ruthless Elimination of Hurry, and he says that, like, the religion now is buying stuff. Like, it's just you know clicks and all this other stuff. So um, my question is how are you seeing this being free and understanding the banking system, uh, understanding where the banking system might be creating a universe that's not kingdom, and how do you break people out of that um, kind of worldview?
Okay, very interesting. So we're taking it in the direction of freeing people from the pre-existing system that exists today, which is in a down spiral turn for ultimate disaster, yet people will believe it until the very end. I think that's where you're going
Yeah,
with it.
yeah.
So
I think that's what's happening now in the market, and with our capitalism kind of
yeah,
deal, and banks are making a killing, saying, it is this is going to make you happy. Buy this widget,
gotcha.
right?
Yeah.
How do you balance that for yourself?
For myself, I do answer things spiritually first, then logical, and sometimes it's a bit of both. But spiritually speaking, I go back to what does the Father instruct me to do? What is Source telling me to do? Creator, the Almighty, the King of Kings. I go to Him for counsel, right? I receive the data, I receive the wisdom, and then I combine that with highly intelligent, knowledgeable people in the area of their gifting. So,
Yeah,
for example, the banking industry. If I want to learn about the banking industry, I'm going to follow and listen to people who've worked for banks, managed banks, built banks, and they can give me the insight. And then
yeah,
when you
yeah,
have conversations with those people or people around who provide services in that environment, you begin to realize, oh, wait a minute, the banks are storing their money in cash value life insurance. I am a consumer. I have a
yeah,
checking and a savings account at this bank that stores all of their money in cash value life insurance, or a extremely large portion of their reserves are stored in cash value life insurance. Why am I not doing the same? That's the very first question. Second question, why are they doing it? Protection,
yep,
liquidity, tax free, compounding, you name it, right? It's an asset on their balance sheet. So that is how I help people come to that realization that what you think you know about money, the whatever rules of money you're playing, is checkers. Here's how you play chess,
yep,
right? And chess, you need to know 5, 10 moves in advance so that you can beat your opponent. You can't move one move at a time and expect to beat your opponent. You need to strategize. What does the whole game look like in the next 5 moves, 10 moves, 15 moves? And that's how you build mastery. So that's all I'm doing is I'm putting myself in a position to show people what I can do, how I can do it, the results I have, and how they can be a part of that
yeah,
solution, right? And that's how very simple. I start there. I don't do too much, because then if you start coming from the perspective of that's wrong, this is broken, and you're stupid, and
Got
this is that, and it doesn't win really anyone over. I'm looking to be a synergist, right? I want to bring
yeah,
both together, collaborate, and go like this, right? And just be a great steward, great manager, great example, great leader that builds other leaders, scale it, expand it. And if we have to, quote unquote, change or
yeah,
restructure an entire system, say the banking system, which, by the way, is in the process. Most people don't
yeah,
realize this,
yeah,
but our whole way of banking is about to change in the next decade,
yep,
maybe less. It it is in the process. We're stepping into the QFS, quantum financial system. That is the next stage of finance, and people have no idea what that is. And we're going completely virtual currencies, right? Paper will be eliminated soon enough. Coins will be eliminated soon enough.
yeah,
So there's going to be a totally different mindset that you must learn now, or you'll be forced into whatever system that you
yeah,
must abide by because you ain't got an option, right? And now you're a slave in the next system, as opposed to breaking free from the current system and building something of your own that
yeah,
is independent, or better yet, interdependent on the kingdom, right? So
yeah.
you have interdependency on the kingdom. That's where you derive all your resources, knowledge, and wisdom from. And you can independently operate here on earth to the best of your ability to maximize your full potential.
That's awesome. Yeah, I think that's again what you mentioned is relationship, right? And a lot of times we're starving for relationship. That's why I feel like people are the downward. We have the Facebook things, but we're not actually in relationship, either to God, one, and to others, right? And so we have to have those relationships, friendships, even, right? And that's why I love this. Even our conversation today is like hey, build a relationship. I've watched you on YouTube, but now we have a actual relationship, not just watching. And it took me saying, hey, I want to be on your show, right? Those kind of things, or you being on our show, right? And I think that's a big deal. So I want to end with one final question, and this came from a client. This one is probably a whiteboarder, and
I'm getting
he
ready.
asked me, and I asked a couple people. I said, "What should I ask Denzel?" Because they watch you, they might be listening right now. And he said, um, and I have this here. I'm going to go ahead and put it in the comments. I think if I can. Um, because I was like, that's good. Um, he says this. Let me see if it's good. Ask him, should I borrow 100,000 from my home equity line of credit to fund my cash value life insurance policy, and then take a loan from it to pay down my HELOC because now borrowed uh, my money is borrowed is compounding. Um, so I sent this to you in advance. Oh, on my cash value whole life policy.
Yep.
So $100,000 he wants to borrow from his home equity line of credit to fund his cash value life insurance policy, and then take a loan from it to pay down his HELOC. Do you want me to remove this? And then I asked him some follow up questions.
Yeah, because
What
we're
information do you need?
yeah, the interest rate on that HELOC. What is it?
I asked him that. How did you know I was going to ask him that?
Yeah.
So his interest rate on the HELOC, first one was home equity line of credit is adjustable, went from 2.5 to 2 to 5.1 is the home equity line of credit, and his HELOC is 5.1.
HELOC's 5.1. What's the credit limit on the HELOC? 100K?
Probably. Let's just say
Probably.
yes.
Okay. All right. So whenever I'm working with my clients, it's the same thing. I need the I need the four major numbers all the time, right?
Yep.
So that's,
I hope I got all the right major numbers. I was like, I'm pretty sure he's going to ask this.
yeah. So I just need to look at their cash flow. They're solving for, all right, I like velocity banking, I like infinite banking. What is the purpose of what we are doing? But let's just look at what the person said. Borrow 100K. So that is full leverage. That is red flag for me, number one. But let's just say we did it anyways, right?
Yep.
Take 100K of debt to now move into the checking account, which then moves into the IBC policy.
Yep.
And depending on how that policy is designed, 100,000 goes in, might have anywhere from as little as 50% of what we put in, depending on how certain people design policies. I've seen policies designed as little as a 50-50 split. So 50%
Yep.
of the 100 goes to base premium. The other 50%, 50K goes to cash value. So we might have in the neighborhood as low as 50K to start, or upwards of arguably maybe like 88, maybe 89K, maybe 90, maybe a little higher,
Yeah.
maybe 90, maybe 91, 92 if we use a certain insurance company, but close to 90% of whatever you put in cash value, whatever you put in the policy, somewhere being the max, somewhere around 90%, as low as 50. So right out the gate, no matter what, I'm definitely negative at least 10 grand, right?
Yep.
So now I only have 90K to work with. I'm at this 5.1% interest rate. Understand that the internal rate of return in the first year is probably negative 16%, 15%, right? It's going to take at least 4 to 7 years just for the policy to break even. All right. So that's your
Yep.
first issue, right? That you got to solve for. But let's just say we kept going. So in the first year, I dump in 100. I now owe 100 over here. I can only borrow up to about 90% of the available cash value. So let's be optimistic and let's say there's 90 grand in cash value.
Yep.
90% of that is 81K. So I can only borrow 81,000. The interest rates right now on cash value life insurance policy loans are somewhere around this number, 3 and 4%. So let's be optimistic. Let's say it's 3, right? So now 81,000 times 3%. So we're going to pay $2,430 over here. And then his strategy was to take the 81 and pay back the 100, right?
Yep.
100,000 minus 81. Now you owe 19. Times that by 5.1%. By 365. So we're paying roughly $2.65 a day for however long I owe 19K. Depending on his 4 major numbers, what we have in cash flow, hopefully we can remove that within 6 to 9 months or less, bringing it back to zero, right? So we got in a 6 to 9 month period, if 969 is the interest that I would pay on 19 grand, if I owed 19 grand for 12 months, through velocity banking, I know I can bring this 969 number way below 484.50,
Mm-hmm.
right?
Yep.
So I know I can reduce it down to less than 484.50 in cost of borrowing on $100,000, right? On the HELOC itself. Okay.
Yep.
Then you attach cashback rewards by doing velocity banking, by running bills through a credit card. Maybe you get 2% cashback rewards. You could probably eliminate that whole cost of borrowing in 1 year of using credit cards to run your bills. So without a doubt, depending on the numbers, in certain cases, probably could absolutely um, bring the borrowing cost down to basically nothing on the HELOC itself. Now,
Yeah.
you still got this over here, that 3 to 4% interest rate on the 81 grand that we borrowed. So that's $2,430 because we're not paying back the policy loan. We're using all the money to pay back the HELOC, right?
Yeah.
And
Yeah.
do velocity banking on the HELOC. And then we have to prepare for the next annual funding amount of 100 grand. So we need to make sure we got that 100 grand
Yep. Yep.
by month 12 so I can fund the policy again. Now, I would say this could probably work. It's risky, no doubt.
Yep.
There's risk here, inherent risk. Number one, I don't like leveraging the whole entire HELOC. That's a bit scary for me. My limit is 66%. That's my rule for the most part. I will I will violate my rule only if my cash flow times 12 is more than 66% of the credit line, right? And I didn't put that on the screen, so 66%, right? Um so we need to account for potentially over leveraging ourselves,
Yep. Yeah.
right? If I lose my job, my goodness, is that scary, right? You just leveraged 100,000 in a policy which you no longer have any access to the cash value. It's all in the HELOC, and now
Yep.
you have the anniversary date coming up again to fund another 100K. If you don't fund the whole 100K, then the policy starts to not perform according to the illustration. That's the second issue that you have. But let's say everything works perfect, right? By month 12, HELOC's at zero, right? HELOC is now at zero. You did velocity banking. You offsetted your borrowing costs on the HELOC itself. Great. This is your cost, the 2,430. So in year two, we're paying in 100 grand plus we're covering this loan interest.
Yeah.
That's important. You don't want the policy to pay the loan interest from your cash value because now it's going to reduce the
Yep.
IRR in the policy itself. So $2,430 is your actual cost to do this strategy if you can bring your borrowing costs to zero on the HELOC, right? You're still going to pay interest in the
Yep.
HELOC, but it got offset by
Yep.
cashback rewards and velocity banking itself, dumping all income in, taking expenses out. Okay, cool. Next year, the the second year you do the same thing. You only need to take out, say, another 90% of what's available in that
Yep.
cash value, and the number should be a little higher than 81K because
Yep.
remember the 10% of cash value that you're not able to touch, that number grew. The IRR shrunk. It's went from negative 16 probably to negative 12, negative 10. So if you did this for a couple of years and everything works out, you don't lose your job or income, your source of income. In fact, let's say you increase your income, you can get to a point where you probably don't need to do that any longer. You can just use the capital cash flow that you've been increasing throughout the years.
Yeah.
So, according to the numbers here, if everything worked out perfectly, your only cost is that interest from borrowing the policy. If we can offset your costs in the HELOC and the bank doesn't freeze our HELOC for any reason and it doesn't cancel, it doesn't reduce our credit limit, and everything works out perfect and the rate of 5.1 stays the same. And you know what I mean? Like everything
Yeah.
needs to be perfect for this to work, right?
Well, and I know as I built the policy for him, he has other ways to fund or use it. It's just kind of thinking through, and it's a policy I like to think about, which is a combo writer where I'm converting is has determined the whole life. By 7 years, he'll have fully converted this, and he has the compounding effect on the dividends and the policy. And he's just trying to make sure he's learning one system, and instead of just, if the bank decides to say, oh, let's change our HELOC and lower it down to whatever amount,
Right.
then he has a different position. Um, and I have a feeling he's not going to retire or need to retire anytime soon, based off his career that he's in. Um, he's not going away anytime soon.
Right.
So anyway, this is good for him.
Yeah.
I think he's going to love it.
And
Just to
then
think through it,
this would be the other areas that need to work out perfect. You need to have the finances in order to get approved for such a large dump in of 100K. So you need to be making enough money for the insurance company to even approve that. On the financial side, you got to have good health. You must qualify. So all that has to, fall into place. So that makes sense.
yeah,
But like I said, if everything, works out perfectly, then go right ahead. I have had some clients do a version of this, but like I said, we don't over leverage our debt tool. We'll borrow a percentage of what we
yeah,
have in capital to help us get to the max funding amount that we want in our policy. And instead of borrowing from the policy to pay back the debt tool, what my clients actually do is they borrow from the policy to go make more money with
yep,
by,
exactly.
investing. So there's a higher potential yield there. And then if the four major numbers make sense, income, expense, debt, and cash flow, in a 6 to 9 month period, whatever we leveraged,
Yeah,
in this case, it wouldn't have been a 100K. We would have leveraged, say, maybe 50 or 40 um, to fund that policy, and that allows us to pay off the HELOC within 6 to 9 months or sooner, so that by the anniversary date, we've got the capital in the HELOC, maybe even additional cash flow to max fund the policy year two, and then keep going 3, 4, 5, 6, 7. And what ends up happening is you actually wean yourself off of velocity banking. You no longer really need it. It's just
yeah,
there, right? It can be
yeah,
your emergency fund tool. It's just additional access to capital. The goal really is to kind of fully kind of wean yourself off of velocity banking at some point in time. And now you've got multiple policies all insured in the family. And then you can go back to the bank and negotiate better terms by getting a
yep,
cash value line of credit at a much lower rate than any debt tool could offer you, right? And
yeah,
that's where I'm currently at in my own finances. I'm actually at a point where I've built up enough cash value in the policy, took out a bunch of loans, had over 6 figures in loans, and now went to a bank. They paid off all my loans in one shot, gave me I'm going to have a lower interest
yep,
rate than what my policy loan interest rate is, which is nice. And I couple that with velocity banking, and now my borrowing cost is going to be probably less than
yeah,
1%, you know, and I'm going to go make 20, 30, 40% by just increasing my income in my business, year
yeah.
over year. Right.
Well, that's something I think about with this guy is he's using this for real estate, right? So he has
Yeah.
tenants and people paying. Um, it's a business model, and so I'm always thinking, what's year 3 and year 4? And again, he's thinking about weaning himself from velocity to this in a systematic way, but also knowing, hey, that it's a both and sometimes it
Yeah.
might be for a while. Sometimes you might have to go back, right? Well, I think he's gonna love this.
Yeah.
I'm gonna share this with him, and he's gonna
You
love
know, if
this.
you look at this strategy, what we went over real quick, what did we really do? Like all we did was max fund a policy, and that's not going to make us multimillionaires by any means, right? So
Yeah,
when if you're asking the question, wait, what's the opportunity cost here? What could we have done elsewhere? And when you measure that, there's a much higher return by doing something else other than this, right? To
yeah,
borrow from the bank, to fund your own bank, to then borrow from your bank to pay back the bank. Nothing really occurred here. You're at a negative loss, technically speaking.
Yeah.
It's just the loss is not that huge, right? On
Yep.
here. But now measure opportunity costs and you're at a tremendous loss of what you could have done with the
Yeah.
funds. And so that's why I'm very clear with my clients. Hey, if we're going to leverage debt, let's not over leverage. Let's use it for a temporary period of time. We wean ourselves off. We go full force, infinite banking, and velocity banking is our, our backup tools, our, additional capital needed, let's say, to get that property you borrow from your policy and you chunk from your HELOC to go
Yeah.
get that multifamily property. So you got to, you got both. It's nice
Yeah.
to have the tools ready and at your disposal because you've got great credit. That's what
Yeah.
velocity banking allows us to do, is build wonderful credit, good strong history, good payment history, good use, and we're
Yeah.
allies of the bank. That's the
Yeah.
position that I like to be in.
Well, and I think again, it's looking long range, thinking long range, not just
Yep.
thinking about the immediate. And a lot of us in our world is just thinking about the short range rate of return. And I'm looking long range, thinking about, okay, I want to have 20 properties. How do I position myself to be able to do that, or 30 or whatever?
Right.
Yeah. So Denzel, I know I've kept you a long time here, and but we've had people watching. Thanks, guys, for listening. If you want Denzel on again, maybe we'll go deeper. Put it in the comments that hey, Denzel, I want you here. I don't think he'll leave his 45,000 subscriber channel to come join ours, but hey, you never know. Um,
I do not
and
underestimate other YouTube channels. Prime example, Wealth Nation. I collaborated with them when they had, I think, less than 5,000 subscribers. I went on their channel, they went on mine, and then within a few weeks or so
yeah,
after I collaborated on their channel, that video got like 50 plus thousand views or something, like 100,000 views, some wild number. For our space, that's a lot of views
yeah,
for
yeah,
our
yeah.
space, right?
Yeah,
And look at them now. They're over six figures in subscribers, probably tens of millions of views. And I think my video with them, our collaboration, is one of the most watched videos on their channel. That's
yeah.
that's
I'm pretty
insane,
sure.
you know?
Well, and
So I do not
again,
underestimate.
the main reason I'm out here and doing this, and what I really want to do is I want to help people. I've again going back to what we started with. I'm a product of a single mom, right? I want to change some dynamics of people's lives, build a bigger trajectory for people, thinking long range and educating. That's why we're here. That's what we want to do. And hey, one of our other people here, uh, the Miss Nikia, she's in our community, and really that's our heart and what I'm hoping people see and why I'm so passionate about this. So, and I know that you are too. So I'm excited. We'll do many more of these and whiteboard Wednesdays or whatever you want to call it. So thanks, Denzel, for joining us. Thanks, guys, for being a part of this. If you like this video, don't forget to like, subscribe. I'll probably break it down into multiple videos, for algorithm purposes. And we will see you next time. Thanks again, Denzel.
Have a wonderful day.